And we're back. Next is a panel to discuss the role of enterprise in the cryptocurrency ecosystem. Taking into account how these models can be useful, what regulation looks like for them, and how and why they can succeed, and how trust can be earned from users in a decentralized space. First, on the panel is an entrepreneur with extensive banking and blockchain experience. Previously at BNY Mellon, he was blockchain lead and founding head of the emerging business and technology team. Co-founded Utility Settlement Coin, Enterprise Ethereum Alliance, and Trusted IoT Consortiums, and was featured in the 2015 FinTech Finance 35 and 2016's FinTech 40 list. Please welcome Alex Batlin. Next, prior to joining blockchain technology companies Algorand, he was at JP Morgan Asset Management from 2002 until 2019, where he was the country head for France in 2014 before becoming head of sales for Italy and representing business in Greece. He holds a master's degree in economics and social sciences in Milan. Please welcome Pietro Grassano. Next we have Peter DeMeo, who works as a private key management person, so welcome to him. Sorry about my teleprompter. And our moderator for this exciting panel is a journalist specializing in business and market news, including stocks, FX, macros, and derivatives, experience with real-time breaking news, features, curation, top stories, business, planning strategy, leadership, and more. She's a highly skilled presenter, panelist, host, and moderator. Please welcome Joanna Ossinger. Welcome, Joanna. Thank you.
Thanks so much. Wow, I feel that was a great introduction, so appreciate that. So let's just get down to business, if you guys don't mind. I think everyone's excited to hear the panel. Welcome, everybody. I hope you're enjoying the conference. So let's get right to this stuff. The topic of the moment. So talking about just enterprises, how does COVID-19 change the game in cryptocurrencies in the context of enterprises? This is talking about both in the current environment and after the worst of the threat has passed. And Peter, if I can call on you to talk about that one.
Great, thank you. Just a little extra on the intro. Peter DeMeo with IBM for about 30 years, and I run one of our digital assets platforms. You know, I think if you think about COVID-19 in Chinese, the word for crisis also has a meaning of opportunity. And, you know, we think about what the enterprises today are experiencing. Of course, it's a recession. Of course, you know, some sectors are worse than the 2008 financial crisis. It's a bear market. I mean, we were surprised to find that even Bitcoin fell ill with COVID-19, right? Back in March. And, you know, in fact, actually, the total daily trading volume in the futures, even this week, has dropped some 77% below 10 billion. And so obviously, you're going to see pullbacks. Some of the firms that I work with here in Singapore are experiencing delays in closing funding rounds. You can see some belt tightening, of course, and conserving cash. The days of free lunch, quite frankly, may be over for a while. And I think some firms are using this as an opportunity to adapt. They're eschewing the office. They're going for remote work. They're augmenting that with periodic in-person sort of networking style kinds of things to save on operating expenses. Post-COVID-19, I think we're going to see that all the enterprises will not recover equally. That will then spur a lot of M&A activity. We'll see some consolidations. And most likely, we'll also see new kinds of partnerships. An example for just something off the top of my mind here in Singapore, we have a reg tech company called Osprey. They specialize in AI-powered KYC and AML checks, blockchain transaction surveillance, whitelisting, auditable reporting, et cetera. And they basically make it easier for banks who are taking on digital asset custody and others to comply with new regulations that are issued. Because, you know, at the end of the day, when a bank is trying to onboard a new asset, exactly when does it hit their ledger, and what do they have? How do they handle it? Right? How do they handle it if you have to return the asset, so forth? So you just with the regulators, quite frankly, not really providing exact, explicit detail, companies like Osprey, make a lot of sense. And so Osprey then is sort of like, going one step further, and they're getting localized legal firms to sort of partner with, so they can have localized opinions. And then they're also teaming up with compliance advisories like Promontory. And Promontory, of course, they know how to build these compliant operating models. In fact, they're the ones that are doing the state of Wyoming for the SBDIs. So you might want to call this new idea ledge tech. And ironically, I think also due to COVID in the US, I think we're seeing a renewed emphasis on central bank digital currencies, or if you will, of the like, right? As part of the COVID response, we have legislators from, I think, Washington and Michigan, they, pushing I think it's called the Automatic Boost to Communities Act, ABC, which essentially authorizes the Fed to create, Fed accounts, which are basically digital dollar account wallets and so forth, that allow U.S. citizens and residents to access digital financial services. So I think, just kind of in summary, adaptation is the word post COVID-19.
Interesting. Okay. To actually build on that, I wonder if, Pietro, you can talk a little bit about how you feel crypto prices are affecting enterprises in the space. Do you see a correlation? Also, are there certain levels of the price of Bitcoin that you would see as particularly good for business? How's that being navigated right now?
But listen, I think that there are two ways to look at the evolution of the cryptocurrencies and the technology. So two different perspectives. No? The cryptocurrency itself, I think that we have always thought that in this moment of crisis, the Bitcoin would have been, and the cryptocurrencies in general would have been somehow decorrelated, representing some sort of safe haven compared to the broad market. And actually, this has not been the case. We saw much more correlation among the broad markets and the risk markets and the cryptocurrencies than we expected, which I think is pretty straightforward. In a moment of panic, I think that everything that is not thought as a pure safe haven becomes subject to losses, to mark-to-market evaluations, and therefore it enhances the panic. In the same time, I think that we can see that many of the responses to the crisis go through an inflation of the balance sheet of central banks, of public debt, and therefore the debasement of the value of central bank money. And in this way, maybe for the future, one of the scenarios that one can think of is that the deflationary cryptocurrencies will have a different role in weathering the debasement of the value of money through time. Okay, from the cryptocurrency standpoint. From the technology standpoint, how does the prices of crypto impact the evolution of the ecosystem? I think it impacts in two different ways, depending on the sources of funding of enterprises working in this space. There are companies that were heavily relying onto their ICOs, and therefore are very reactive to the evolution of their own cryptocurrencies. Other companies are still working in the same kind of environment, offering technology that have had more hybrid sources of funding, so doing, I would say, traditional equity rounds on top of the initial coin offering logic, which can be much more resilient as of today.
Okay. And then Alex, do you want to take a stab at your thoughts on that as well?
Yeah, sure. I mean, to answer your original question, I think two types of enterprises, the crypto and non-crypto. The crypto enterprises tend to be small. Some will define them as enterprise, some not. But essentially, those we've seen massive amount of trading. Yeah, kind of a lot of the folks, whether they're brokers, whether they're dealers, market makers, or funds, a lot of the time, these guys are long short. So we're actually seeing huge amount of trading recently. So kind of some of the stuff we offer is Trustology. We have what we call on-exchange wallets. So this is protecting clients' assets on exchange and makes it really easy to rebalance portfolios. So we're seeing a lot of business there as people move assets between exchanges. And we also have kind of the capability to protect assets on-chain, whether it's Bitcoin, whether it's Ethereum, ERC20 tokens, or Binance Chain. And again, what we're seeing a bit more, funds who may be 100% on exchange are now starting to take advantage more and more of our kind of on-chain solutions, because they're worried about guys like BitMEX maybe at one point as 100x leverage, and then when you get a massive drawdown, that becomes risky. So people are much more aware about the risk of the counterparty being the exchange in this case. So actually, from our point of view, it's been good business. We had folks signing up. I think in terms of the more traditional enterprises looking to get exposure into crypto, couldn't agree more with Peter and Pietro. There is pullback, not because necessarily people don't see value in it, but if you're a big bank right now and you're managing all the disbursements of aid, kind of loans, whatever it is, your focus is going to be on that, and that's going to be the case for the next 3 to 5 months. So I think there is going to be a pullback, but at a macro level, I mean, goodness sake, in less than 15 years, we've seen 2 massive quantitative easing exercises. And it happens to be okay if you happen to be an American bank and getting most of the benefit from the quantitative easing. But if you're anybody else, you've had your money devalued not once, but now twice in a massive way. And even worse if you happen to be a foreign national heavily exposed to kind of US dollars, because essentially you are just seeing your value being, I don't want to say stolen, but realistically, whatever you had in your pocket is worth a lot less now than it was the day before, and you have zero benefit. So given the fact that we had 2 massive quantitative easing rounds in less than 15 years, I think the first prompt that prompted Bitcoin in 2007 is going to be simply amplified this time around, and people will question whether or not it's acceptable to have reserve currencies that you depend on that are utterly controlled by a foreign nation that may not be sympathetic to your cause. So I think at a macro level, we're going to see this is yet a second death nail, in my opinion, to kind of fiat reserve currencies. The world cannot continue going this way. Whether or not people will trust Bitcoin enough or something else is another question, but it's, in my opinion, very clear that the current system is just not fit for purpose. So those are the kind of thoughts I have right now regarding this topic.
Okay. And then that gets to the question of kind of mass adoption of crypto, blockchain, and kind of what does that look like moving forward? Pietro, did you want to talk about that?
Yeah, sure. I mean, I think that what we've been witnessing so far, again, is on the same object, you can have 2 perspectives, right? On the same combination of a technology and a unit of measurements on a distributed ledger, which is the cryptocurrency, you can approach the thing from the technological standpoint or from the cryptocurrency standpoint. In order to have a mass adoption, I think that what you need is actually a blockchain that works. So the logic is why, I mean, the thing is around since 10 years, right? Okay, we've been doing consortia, we've been doing massive amounts of proof of concepts. Why is that anything came truly to production so far? Or if it happened in smaller terms than the original expectations. I think that there has been a mismatch between the expectations and the reality, which is related to the logics of being more decentralized in many of the implementations that we've seen so far, being more centralized than expected, or being less scalable than expected, or having sometimes security problems. The combination of the three things, security, decentralization, and economic scalability, is actually what can allow blockchain and the crypto world to be true to its promises. I think that this is what companies, regulators, and individuals are expecting before going towards a mass adoption logic. And interesting enough, I mean, if we look at the ecosystem from the enterprise/institutional standpoint, I personally see three different groups of participants to the ecosystem. The first one is governments/regulators, which are, in my opinion, progressing quite quickly in the understanding, in the evaluation, in sometimes trying to accept and benefit from the technology, sometimes trying to obstacle it, but they are thinking of it very, very heavily. Then there are the big enterprises, which are actually more on a wait-and-see kind of attitude. Sometimes they allocate some budget, but just because blockchain is a buzzword, they think that they cannot really miss out. And then there are the small companies, those that are more entrepreneurial, right? They have an angle that, of course, they see the possibilities and they see the need of implementing it. And sometimes they are able to dialogue with the regulator in a much more innovative way than the big companies that, by definition, have vested interest in the status quo. It's nothing particularly new. So I see more activism from the regulator side and from the small company side and from the big companies, which will eventually follow all the regulatory movement, all the let's say, the political acceptance of blockchain as a technology.
Okay. And actually, so one other question kind of related to all this, how does an enterprise earn the trust of users in a decentralized space? And Alex, you were alluding to that a little bit before, so do you want to start on this one?
Yeah, I mean, so trust is a difficult one. It takes time. So I think, again, at a macro level, if you look at it from a very big point of view, COVID has demonstrated to us the weaknesses of centralized systems with single points of failure. You know, simple stuff, for instance, we are trying to file with ICO in UK our kind of updated payment for the register of the GDPR. Because you have to send a paper form to the office, they can't process it, literally, because no one's in the office. So having kind of centralized systems is in many ways efficient, but actually it has zero resilience. And we're now seeing this time and time again. You know, we've optimized our healthcare systems, our kind of supply chains to be super optimum. But as soon as there's any sort of additional pressure of 1 or 2 percentage points in terms of illnesses in healthcare system, we're talking about massive lockdown. So everyone focuses on the immediate efficiency. They never calculate the cost, which in this case is humongous because of, you know, we've did not provide enough resilience in the system. So I think post-COVID, you know, we need to ask very serious questions about what is the cost of not fixing resiliency. One of the best ways of fixing resiliency is through decentralizations. It's just an engineering concept. Kind of the more unions there are, the greater you have kind of incremental or almost exponential resiliency. So it's macro level. If I was the government, the first thing I would be doing right now is saying, screw the centralized banks as in operationally. I'm not saying about issuance necessarily, and make sure that you have super decentralized systems. And Bahamas, with their $10 is a perfect example of using blockchain as one of those kind of decentralized mechanisms because they have constant outages. So the efficiency versus kind of cost savings versus decentralization resiliency or lack of costs is going to be a massive topic going forward. And I think big institutions need to worry about that. More immediately, of course, the other interesting thing is everyone's saying that, crypto never had a black swan event, and therefore never proven itself. Well, we had a black swan event, and there were many, many failures. But actually, at the same time, it survived. So I think the argument that it doesn't work, it still works in very small, narrow case, but it has been battle tested right now. And I think that's super exciting for me. But the next stage of all of this is kind of looking at stuff that most ICO projects weren't worried about before, but will need to be now, which is treasury management. If they're funded in tokens and so on, these are highly volatile. And we're starting to see the evolution of people really thinking about how to do treasury management and how to hedge your positions if you happen to be backed, your balance sheet is predominantly utility tokens. So we're seeing the emergence of DeFi, which is providing hedging, long, short, and all those kind of scenarios, which again, to me is super exciting. That's what I got into this for, because I want to have an extremely resilient system that gives you all the benefits of traditional finance, but at a much more global, resilient level. So again, we see, because we support DeFi dApps on Ethereum through our custody solution, we had a massive pickup of people looking at how do you hedge, how do you trade in a decentralized manner, because that reduces their risks and gives them more global exposure. So actually, I think there's a lot of positivity going forward because of the macro and the micro kind of impact of COVID.
Oh, interesting. Okay. Peter, do you want to tackle the issue of earning trust in a decentralized space?
Sure. I just want to pick up on a couple of points for my colleagues. I guess the first is we talked a little bit about different fintechs or big enterprises. Like what is the enterprise, right? And I think I come from a large enterprise, so I guess I'll look at it from that perspective. And I think the point about resiliency is actually critical, right? Whether you have a centralized or decentralized approach, resiliency, availability, and transparency, quite frankly. Sometimes you use the word trust, but I don't know, that's kind of a loaded term, isn't it? If you trust somebody, that means then perhaps there's not a lot of transparency and, well, maybe they're not doing right by you, So I think those are the kinds of characteristics that I would look for, in any kind of enterprise, right? So, if you think about the large corporates though, like Facebook and Google, you think they're going to ever feel the love of the decentralized community? I don't think so, right? I mean, because at the end of the day, they don't have the incentive model to make that work. People will gladly trade off their privacy, and they have for years, because it's free, right? And so the whole economic model of the large corporates, quite frankly, is just orthogonal to what the decentralized community would believe in, right? So I don't know if the large corporates will ever make true inroads into the decentralized community in terms of developing their trust. But what I will say is that they can do some things. Like some large corporates, like IBM, for example, they can donate to open source projects that the other enterprises can then build off of, because the code is good, it works, it's trusting. For example, we donated, probably aware of that, Hyperledger Fabric to the Linux Foundation. And people have built entirely new businesses on the back of Hyperledger Fabric, right? Such as Food Trust, TradeLens. These are actual businesses that are self-sufficient and actually doing stuff. They're live in production, right? They're having an impact on society. But I do have to say that enterprises, maybe smaller ones, we all have to sort of answer the mail, if you will. Crypto finance. Take crypto finance firms, okay, like hedge funds, market makers, lowest cost and best user experience, right? So they're more than happy to actually go after a centralized exchange like Binance or Cumberland or Genesis, despite the transaction fees, the duration of trades, the counterparty risk, what have you. So you still have centralized and decentralized even when you're talking about smaller players. Of course, when you really think about, and Alex was talking about so DeFi, right? So if you think about least cost and lowest counterparty risk, that you're going to get that not from a centralized entity, but truly from a DeFi platform, let's say like Compound or Maker. But for these, you really have to gain the trust of the creditors and lenders in order for them to really take off. And we've seen some recent issues, not necessarily hacks, but manipulation. It's still a little early, right? But the other thing about these platforms is that we think of them as autonomous smart contracts, the kind of like work, there's no humans involved and all that kind of stuff. They just work, right? Well, actually, it's interesting. These DeFi platforms often have their own degree of centralization, and there's actually risks in there. And quite frankly, I don't know if anybody knows about them. I mean, you actually have administrators on these DeFi platforms. How do you think who's making the determination about which assets to list? What are the collateral requirements? What are the interest rate, right? These administrators actually have, control the price feed, or I should say access to the price feed. So presumably they could freeze transactions or maybe even steal keys. So, there's no silver bullet out there, whether it's decentralized, or centralized or large or small. I would simply say that if you can just kind of bring it back, right? If you can, put something out there that others can build upon, like even Bitcoin itself, right? That's how you start to gain the trust and earn it with the community, because you're not just in it for yourself, you're in it for everybody. So open source contributions and nurturing that, I think, in terms of gaining trust is one way that you can get the decentralized community to buy in.
Nice, thanks. Okay, so let's get to a few practical tips as well. So say you're an enterprise on the small or medium side, maybe we have a few people out there listening who fit that category. You want to expand to the next level. So what does that take? Pietro, do you want to take that one?
Well, I think that it takes a few different steps. One is, of course, focusing on the area of added value, that the elements of added value that you can bring to the ecosystem in a very focused manner. Another one, which I think is absolutely key, is understanding the regulatory environment, right? So, yeah, a lot of decentralization. At the same time, on the other hand, a lot of humongous companies, which are virtually global monopolists, which, for the regulation of the 40s until the 80s would have been a subject for the antitrust, right? So where in between does regulation want companies to start to focus? There are examples that are very interesting. For instance, in the battered European Union through the strategy for small medium enterprises, where you have regulatory sandbox environments that allow small medium enterprises to grow up and the regulator to understand what they are doing. And therefore, you can build businesses based on that. As a third element, I would say that it's important that you decide to pick the best available technology. Because if you are in a world that is by definition uncertain, it's by definition related to innovation, where actually the risk of picking the wrong horse in terms of technology, because you will rely on a technology that reveals not scalable from the economic standpoint, for a business that you have in mind that should be scalable in the future, well, you're doing the wrong choice, right? So these are the three elements that actually seem to me the most important in order to expand, in order to understand how the ecosystem evolves, and in order not to remain stuck in the middle between the logic of being micro enterprises with a lot of entrepreneurialism, and on the other hand, the big global monopolists.
Okay. And Alex, do you want to talk about that too? So next level, how do you get there?
Sure. I mean, like with any other business, you need to carefully pick your customer segment. And the interesting thing is, the original Bitcoin was, the customer segment was retail. We haven't hit it there yet. In all honesty, the tech is just not good enough. It doesn't scale. It's not fast enough. And frankly, apart from those people who want utter privacy, stroke anarchy, most people, especially in Europe, don't find the problem with payments. Maybe US is a bit different, but individuals, it's very fast and very easy to do and actually pretty cheap. But where I find most of the utility, apart from the speculation, is actually the small to medium enterprises. Because actually, if you're very large, then your cost of payments is really kind of cheap. It's all well set up. But if you're a smaller player, then actually kind of Swift 4 or 5 days and very, very expensive still. Much of the kind of, if you're a very big listed company, you've got very good systems for your kind of securities tracing. But if you happen to be a private enterprise, this is pretty poor right now. So where I actually think the gap is in between the retail side of it and the big business, because I think there is a lot of undeserved opportunity for SMEs. And at that point, actually, in many cases, the technology is good enough, because everyone keeps saying, everyone's comparing to Visa, for instance, transaction processing. But the alternative is to compare, for instance, Ethereum settlement against something like the RTGS system by Bank of England, where actually the number of transactions per day is a lot less than the number of transactions you need that can be processed on the Ethereum blockchain. So actually, if you look at the throughput that something like Ethereum as a global value settlement system can cope with in about 20 seconds per block, probably can take care of most RTGS global needs. And when you look at it from a high value point of view, payments, it's much superior. You're paying, 20 pence to potentially transfer millions, 2 million, it's a flat fee. Something like Swift simply cannot compete. So I think where we're going to kind of be focusing on is high value transactions, but not the super high ones, so that SME level, because actually there you're solving real problems. Macro level, of course, also is that question of, do we ditch reserve currencies or not? So I think long-term kind of macro level, where mass adoption will come, it will come if we ditch reserve currencies or supplement them. I don't think we'll ever ditch them, but supplement them. But in the more short term, actually, I think there's a huge amount of kind of opportunity in the SME market for this technology, because it's typically underserved. There's a lot of great solutions on the retail side. There's great solutions at high enterprise level. But that middle ground, I think there's a huge amount. But in order to get there, we need to make it safer, faster, and easier. I mean, this is kind of what we always drum on about. Safer, faster, and easier, because unless it's easy, no one's going to use it. Unless it's fast, like cold storage is great, it's safe, but man, waiting 48 hours is crazy. Nobody's going to do that, especially when you got margin calls that you need to transfer stuff, which is why we're instant access. And of course, it needs to be safe enough. And I think the safe angle is kind of mostly there now. But that faster and easier angle still needs to be worked upon in order to really gain that. And then crystal clear, going after utility for the right customer segment, which right now feels like the SME market.
Okay, thank you. All right, I think we're on to the last question. So let's just say, if you had 1 or 2 tips for enterprises, what would they be? And if you have any closing thoughts. So Peter, do you want to start?
Oh, wow. It's almost over, huh? Okay.
I know.
As a closing, no, actually, as a tip, the first thing I would say is this. I was working with a client in the US. They're building a true digital asset trust, not an SPD, but an actual trust. And I asked the founder, who the first hire was. And he said it was the chief compliance officer before anybody else. And I just thought that was really interesting, because I think he understands that where we are today is we're no longer just kind of roll your own. You actually have to think about your business, your transactions, and everything in the context of a regulated environment. Because even whether you're a custody provider, whether you're an exchange, what have you, you're going to be licensed. That's just the new reality, right? So compliance is kind of a big deal. Interestingly enough, however, I would say a lot of our digital asset businesses, we have a lot of competition, and as things are constantly moving, the services are really becoming better, but the margins are becoming lower and squeezed, and it's becoming a very high compliance cost business, right? So I think that firms really should have a tendency to, because they've invested so much to build this amazing platform, really secure, it's awesome, it's cold storage on the cloud, whatever. But do you really need that? Or maybe you should be pivoting away from kind of rebuilding the wheel to something to add additional services and focus on your core competencies, because there's a lot of competition, especially in the custody space. Trust me. So it's important to then see what's good enough in the market and then pivot your resources back. And I guess the other thing I think about is it's take even a bigger step back. Is blockchain really the right technology? Are you getting the competitive advantage from that? When at IBM, when we do enterprise design thinking, co-creation workshops with new clients, the first thing we do is really hammer on the hard business questions, right? I mean, are you doing this because, what Pietro was saying earlier, Alex, I think, are you doing it because it's really cool, flashy, sexy thing? It's trendy, or can the business model be actually monetized? Are you heading down the wrong path? I mean, ask yourself, does your solution bring buyers and sellers together in a way that it earns revenue across the marketplace? Can you earn revenue by selling access to third-party providers or users of the data on the platform, or to service providers on your platform? Do they earn revenue by providing additional services and things of that nature? So once you've got all that business model stuff figured out, I'd say the last tip would be, make sure you've got the buy-in from your CEO and your board. Especially, Alex was talking about the small and medium businesses. I think this is absolutely critical, right? So if you can get their commitment, you can really drive success through the entire organization. And even if things change, the business model might evolve. Always be willing to cut your losses and run, because a lot of times the smaller businesses, especially now with budget squeezing, continue down the path that's just not going to get them there. And by the time they realize it, they've already burned through too much cash and they're done. So always be willing to take a hard look at your business model and be willing to do what it takes. Don't invest in a bear market.
Thank you. Pietro, do you want a tip and any last thoughts?
Sorry, I was muted. Well, one is, as an entrepreneur, one has to focus on the slack of the current model. That's where you actually get your own lunch, right? So to focus on what doesn't actually work fully in the current models will allow the entrepreneurs to go in the right direction. Secondly, in order to implement, because implementation is key, you have to pick the best technology available. You have to focus on the logic of economical scalability, of security, and through decentralization when transactions are involved. Because again, blockchain is useful for transactions, right? I would stick to those two, not more.
Okay, thank you. And Alex?
I guess if you are a startup, you need to be focusing on white space, kind of where is the next problem that you can make revenue out of it, because you're not going to be able to squash the competition by your size. If you're a big enterprise, typically they don't innovate, but what they can do is squash the competition with their size and do something slightly better, slightly cheaper with kind of lower marketing costs, because they don't have the client acquisition costs, they already have the client base. So I think if you're a large enterprise, you need to decide if crypto is somewhere you want to be, and I suspect there'll be a bunch of M&A activity if there are entrants into the markets, because they're not going to be building stuff, they'll want to accelerate and then improve on that. If you want to be a startup, you should be really looking at white space, because going against incumbents with deep pockets is very hard to do so.
Okay, thanks everyone. Really interesting panel. I appreciate it. So back to you.
Yes, I agree. An absolutely phenomenal panel. Thank you so very, very much, Alex, Pietro, Peter, and Joanna. Thank you for joining us for BlockDown 2020. And Peter, I'm very sorry about messing up the intros there. We have an action-packed afternoon coming to you from Amsterdam. We will be back very quickly after a short break with our next guest. Stay tuned.